More with my guest now, Soon Hock, Managing Director of Asia Genesis Asset Management. Soon Hock, we have an email. This one comes from Larry, who says he's impressed by the consistency of your returns. He wants to know what percentage of your decisions are based on fundamental data versus technical indicators and charts.
I use all tools, whether is it fundamental, technical, or psychological, and also assessment of our own personal position, whether we are trading from strength or trading from weakness. We try to not put too much overall emphasis on our view on the market, especially when we are wrong. So the ability to always adjust quickly helps to keep downside volatility low.
Okay, now let's get back to another currency trade. We said you're going long yen. You're going short sterling. Now, once again, economic data lately showing a pretty mixed eco picture in the UK. We've had rising prices, we've had rising wages, industrial production and the trade balance both slumping, though. You're going short sterling. Why is that?
Basically, I think sterling is on the long-term downtrend, but in the last 3 months, we have a very significant rebound. So I'm bullish on yen, so I want to look for a currency that is overbought and trend-wise is down. So given this analysis, sterling versus yen looks like the more or less the ideal cross-currency candidate.
Okay, sounds pretty straightforward to me. So you get rid of the sterling. Now, I noted we can talk a little bit about treasuries. You are saying buy to the US 30-year Treasury at the moment. The long bond, that's 30-year Treasury, is not callable for at least 15 years, are down 15% year to date. So clearly you feel they've got to a kind of price where the yield is attractive at about 4.5%.
That is a short-term trade because of my negative outlook for the stock market for the next 3 to 6 months. But big picture, I must caution, I'm a long-term bear on US long bonds. This is more a short-term trade which is dependent on the stock market being bearish. So I'm looking at US long bond as the carriage, not the horse. Okay, the horse this time around, I believe, is the stock market.
Okay, what kind of price? I mean, how long would you hold these treasuries for in the short-term trade?
No, I think it's bullish, but I'm not turning long. You know, I prefer.
Yeah, but short term you would buy them. So what kind of price would you get rid of them?
Yeah, short term I would buy them.
Yield?
I think that they can appreciate 2 to 4%. You know.
Okay, fair. So
over the
you
next
pick up
couple of months.
Right, you pick up a quick few bucks over the summer period. But longer term, you suggest you have some inflation concerns, correct?
Yes, inflation concern, and also with the Fed being so aggressive, printing so much money, the theories on being long 30-year US bond is just way too high down the road, you know.
Okay, just very quick answer to one email that's come in. This from Walter saying, do you see oil at $85 a barrel soon at all?
Not so soon. Probably down the road when if in another phase whereby the stock market have a good rally. For the time being, I don't see for the rest of this year oil at $85.
Okay, Soon Hock, thank you very much indeed for your time today. That is Soon Hock, Managing Director of Asia Genesis Asset Management. As I've noted, he has beaten 97% of his peers, so no doubt worth listening to. Soon Hock, thank you very much indeed for your time.